Welcome to the Consumer Financial Protection Bureau's field hearing in Louisville, Kentucky at the Muhammad Ali Center. At today's field hearing, you will hear from Director Richard Cordray and a panel of distinguished experts who will discuss issues related to access to checking accounts. The Consumer Financial Protection Bureau, or the CFPB, is an independent federal agency whose mission is to help consumer finance markets work by making rules more effective, by consistently and fairly enforcing those rules, and by empowering consumers to take more control over their economic lives. My name is Zixta Martinez. I'm the Associate Director for the External Affairs Division at the CFPB. Our audience today includes consumer advocates, industry representatives, academics, state and local officials, and of course, consumers. We are especially pleased to have in the audience Charles Weiss, Commissioner of the Kentucky Department of Financial Institutions. We are delighted that you are here. Let me spend just a few minutes telling you about what you can expect at today's field hearing. First, you'll hear from the CFPB Director Cordray, who will provide remarks about the Bureau's efforts to improve access to lower-risk deposit accounts. Following the Director's remarks, David Silberman, the Acting Deputy Director for the Bureau and the Associate Director for the Bureau's Research, Markets, and Regulations Division, will frame a discussion with a panel of experts. After the discussion, there will be an opportunity to hear from members of the public. Today's field hearing is being live-streamed at consumerfinance.gov, and you can follow CFPB on Facebook and Twitter. So let's get started. I'm now pleased to introduce Richard Cordray. Prior to his current role as the CFPB's first director, he led the CFPB's Enforcement Office. Before that, he served on the front lines of consumer protection as Ohio's Attorney General. In this role, he recovered more than $2 billion for Ohio's retirees, investors, and business owners, and took major steps to protect its consumers from fraudulent foreclosures and financial predators. Before serving as Attorney General, he also served as an Ohio State Representative, Ohio Treasurer, and Franklin County Treasurer. Director Cordray.
Thank you, Zixta, and welcome everyone today. I was saying to Zixta that our visit to Kentucky today polishes off the 4 commonwealths around the country for us. So we're really pleased to be here, and thank you for joining us today in Louisville to talk about individual checking and savings accounts. When I think about these deposit accounts, I'm reminded of my dad, now 97 years old, God willing, he'll turn 98 next week, who lost all his paper route money in a bank failure during the Depression. Of course, banking today has little in common with the banking of my dad's boyhood. In his day, consumer finances were transacted primarily in cash, and financial panics frequently caused liquidity crises that did severe damage to the economy. Today, people can rely on the security of federally insured accounts, and how we use deposit accounts has changed profoundly, with much greater access to our money and more convenient ways of paying without cash. At the time my parents helped me open my first passbook account as a child, the deposit account experience was still pretty simple and straightforward. Banks accepted people's money with the promise of holding on to it safely. When consumers went in person to withdraw funds, they either had the money in their account or they did not, and the bank would only provide as much money as was available in the account. But a few decades ago, all of this changed dramatically when people began to be able to overdraw their accounts as a more routine matter. Today, for a wide variety of reasons, there are nearly 10 million unbanked households that have no checking or savings account. Some consumers may have been rejected when they tried to open an account before, or they might have lost an account after it became overdrawn and they were unable to recover. Others might simply choose not to participate in the banking system, perhaps because they're uncomfortable with the costs or risks they believe it poses for them. At the Consumer Bureau, we believe that people who want the benefits and conveniences of some kind of deposit account deserve a fair opportunity to have one. We're concerned that some people are being inappropriately sidelined by 2 things. The first is the lack of account options that fit their financial needs and situations. The second is inaccurate information used to screen out some potential customers. Today, the Bureau is taking 3 steps to address these concerns. First, we're encouraging banks and credit unions to make lower-risk accounts more accessible to more consumers. Second, we're pressing the banks and credit unions, as well as the consumer reporting companies, to improve the accuracy of the checking account reporting system. Third, we're providing new resources to help consumers better understand how to navigate their options. If we can make it a point to do all of these things, consumers will benefit by having more choices and more predictable costs. On the first point, today we're urging banks and credit unions to make more product choices available to consumers. After all, a healthy market thrives when people have multiple options that can better fit their needs. In the 1980s, as automated teller machines and electronic payment channels emerged, banking changed in important ways. Many banks and credit unions began to authorize overdraft transactions on a more regular basis, both for electronic transactions and for checks. This willingness to advance funds helped people avoid bouncing checks or having debits returned unpaid, but it also allowed the institutions to collect more fees. Over the years, overdraft programs have become a significant source of industry revenues and a significant reason why many consumers incur negative balances. Too many problems with overdrafts can cause people to give up on the banking system or force them out of it altogether. To ensure that people have account options that meet their needs, the Consumer Bureau is encouraging banks and credit unions to offer them the choice to enroll in deposit accounts that are designed to help consumers manage their spending and avoid overdraft and fees. Although a majority of consumers seem to be well served by the deposit accounts now offered at virtually all financial institutions, others struggle to deal with certain riskier aspects of these accounts. Rather than ending up stuck outside the banking system or incurring costs they can ill afford, these consumers can better manage their money and avoid financial distress by signing up for accounts designed to prevent overdrafts and overdraft fees. By simply offering consumers a bit more choice, banks and credit unions could help more people enjoy the many benefits of a banking relationship. In particular, we support the FDIC's efforts to encourage financial providers to offer lower-risk account options on a broader basis. We also applaud the work being done nationally by the Bank On movement, and specifically by Bank On Louisville, which is a coalition that includes Louisville Metro, a number of banks and credit unions, and nonprofit partners. The national account standards established by Bank On exemplify the kind of lower-risk products that could be offered as an option for consumers. Thus far, too few of our financial institutions have developed such products or marketed them as much as they do their other products. Who is the audience for these products? One substantial group of potential customers gets screened out right now when their past history shows they may have trouble handling the risks posed by traditional deposit accounts. Yet if these customers are matched with accounts that have more fitting terms, then they need not be excluded from the banking system. Instead, they can become depository customers with the potential to develop healthier financial lives as they find success and grow into other banking products and services. A second potential audience is consumers who have chosen to drop out of the banking system because they found themselves paying high fees they did not anticipate or, in hindsight, wanted to avoid. In the FDIC's latest survey of unbanked households, almost 1/3 identified the unpredictability of fees as a reason for not having a bank account. Lower risk accounts could minimize or eliminate their exposure to such fees. A third potential audience is consumers who are new to checking accounts, including young adults just entering the banking system, some of whom experience more risk of losing control of their spending and hence their accounts. Some banks that have added lower risk accounts to their offerings have expressed surprise at the strong uptake they've seen from millennials in particular with these accounts. Finally, many other consumers who have shown themselves to be perfectly capable of managing their accounts successfully might prefer to have a choice between a traditional deposit account and a lower risk account that helps them avoid overspending, stay on a budget, and not be subject to unforeseen fees. The existence of these several audiences seems to offer a powerful response to the financial institutions that have implicitly or explicitly rejected these safe banking products as idealism or mere charity. By unnecessarily limiting their product choices, these institutions have missed a substantial segment of the population rather than finding a way to include them and help develop their economic potential. Among young people just entering the financial system, banks and credit unions may be missing an opportunity to build loyalty and to dispel prevailing mistrust of the banking system. That is not charity at all. Instead, it is a hard-headed business judgment that takes the longer view and seizes opportunities to build sustainable customer relationships. To this end, I sent letters today to the CEOs of the top financial institutions in this country, urging them to consider how to address these issues more effectively. We recently reviewed the websites of the top 25 retail banks, and we found that only 8 of them marketed a no overdraft product option on the same page as their traditional checking account options. We also found that 7 others offered a product with no authorized overdrafts, but did not feature it on their main menu of checking account offerings. And 10 of the institutions did not appear to offer any options at all to allow consumers to open a lower risk account designed to prevent overdrafts. We encourage institutions to offer such products, and if they already do so, to feature them more prominently in their online and in-store checking account menus and as part of their sales consultations. What is clear enough is that if consumers do not even know about a product, even one well fitted to their needs, they cannot be expected to sign up for it. These safer products do not even have to be checking accounts as we typically know them. Many general-purpose reloadable prepaid cards are specifically designed to help consumers manage their spending while limiting their transactional costs and risks. While prepaid cards were developed by entrepreneurs as an alternative to banking, the funds in these accounts are almost always held by a bank or credit union and enjoy federal deposit insurance. Moreover, some prepaid cards are made available right now by banks and credit unions to their existing customer base. The Bureau will finalize a rule this spring to ensure, among other things, that prepaid card customers have error correction and dispute resolution rights comparable to those for checking accounts. Prepaid cards may not be the first choice for every consumer, but everyone deserves the opportunity to choose what is best for him or her. Let me also take a moment to acknowledge another positive development, which is the decision some banks and credit unions are making to provide consumers with real-time information about the funds in their accounts available to be spent. They're doing this through various means, including online banking and text and email alerts, which can reduce the risk that consumers inadvertently overspend their accounts. Still, we encourage the banks and credit unions to press harder as they think about how they can tailor their products more effectively for a larger base of potential customers, which includes making funds available as early as they can. All these steps will help ensure consumers have more ways to take control of their financial lives. Wider use of safer account features will also enable financial providers to relax their screening criteria without increasing their risk. By expanding access, they can create more successful and sustainable customers. The second step we're taking today is to improve checking accounts access, is to remind banks and credit unions of their obligations with respect to the accuracy of the information they report about consumer use of checking accounts. In addition, the consumer reporting companies also have an obligation to ensure accuracy when they sell this information to others. Banks and credit unions have obligations to foster accuracy when they submit information to the specialty consumer reporting companies about accounts that were closed for fraud or unpaid balances. Those companies, in turn, assemble or evaluate all the information provided, then sell it to third parties. All of this information is clearly related to preventing fraud and screening for credit risk. But because many banks and credit unions use this information to make decisions about whether to offer account products to consumers and on what terms, the accuracy of the information is crucial. If it is not accurate, then consumers will be inappropriately shut out of the banking system with little or no effective recourse. Indeed, accuracy is expressly required by the Fair Credit Reporting Act, so we're concerned about the levels of accuracy in the information furnished to the consumer reporting companies that serve the deposit account market. Through our supervisory work, we have found that some of the largest banks lack the appropriate systems and procedures necessary to furnish accurate information on millions of accounts. Today, we're issuing a bulletin warning banks and credit unions that they must meet their legal obligation to have appropriate systems in place with respect to accuracy when they report information, such as negative account histories, to the consumer reporting companies. More effort and rigor are needed to make sure that the risk consumers actually pose to potential financial providers can be evaluated correctly. Of course, the specialty consumer reporting companies that track deposit accounts also merit our scrutiny as we work on these issues. They have important legal obligations with respect to the accuracy of the information they sell, as specified in the Fair Credit Reporting Act, ensuring that they are adopting and implementing reasonable procedures to assure maximum possible accuracy of the credit reporting information they provide, as the law explicitly requires, is an important area for regulatory oversight. The Consumer Bureau will continue to insist, through its oversight authority, that banks and credit unions furnishing information, as well as the consumer reporting companies collecting information and selling reports, must comply with their respective duties under the law. When we see this is not being done, we will take appropriate supervisory and enforcement actions. Living outside the banking system can be costly and time-consuming, especially for those who are the most financially vulnerable. They come to often rely on expensive non-bank money services that can take a big bite out of their earnings. So the third step we're taking today is to help pull back the curtain on the checking account options available to consumers and point out the rights they have if they're denied access to a checking account or if misinformation is reported about them. We're issuing a consumer advisory and additional resources on choosing, managing, and reopening an account. All are available on our website at consumerfinance.gov. We're releasing a consumer advisory to alert people that lower risk accounts do exist in the marketplace and can help them take more control of their spending. These accounts may serve as a gateway for more consumers to enter the banking system, even those who have struggled to maintain an account in the past, because the accounts pose less risk and hence less reason to screen those customers out. Many consumers who had an account closed and later seek to open a new one do not understand how their application will be judged. The qualification process can be confusing and opaque. Until they're rejected for a bank account, people often do not even know that their prior account usage has been recorded and shared with other institutions. Some consumers find that the information being attributed to them and preventing them from getting a new account is inaccurate. Others are entirely unaware that they would be likely to qualify for a lower risk account where such accounts are offered. Today's advisory also helps people know what to do if they've been denied a deposit account or had one closed involuntarily. In most cases, the denial would be based on information supplied by a checking account reporting company. Our advisory explains how to get a copy of your checking account history from the company if you're blocked from opening an account. In addition, you also have a right to dispute any inaccurate information contained in these reports, and the consumer reporting company is required to investigate it and correct any inaccuracies. To help consumers pursue any such disputes, the Bureau is issuing 2 sample letters, one to dispute the accuracy of the information with the consumer reporting company, and the other to dispute it with the financial institution that furnished the information in the first place. Under federal law, negative information can remain in a credit report for 7 years or more. So it's clear that inaccurate information can damage a consumer's reporting profile for a long time and cause enormous harm. Consumers need to understand how they can participate more actively in the system so they can take more control of their financial lives. The bottom line is that we're working steadily to ensure that the banking system is open to all consumers who want a banking relationship and will not engage in fraudulent conduct. This requires that the information banks use to screen customers is reliable, and that the information is used to match consumers with deposit account products that fit their needs and promote their successful use of the banking system. The Consumer Financial Protection Bureau is in a unique position to make a difference in improving how the checking account reporting system actually works. We're the only federal financial regulator with the authority to supervise both the larger depository institutions and the larger consumer reporting agencies for compliance with federal consumer financial law. Thus, we can consider and address these issues comprehensively, engaging directly with both sets of industry participants. We've already released several groundbreaking reports on the credit reporting system. We've also worked with consumers to expand their knowledge and awareness of the importance of credit reporting to their lives through consumer advisories and by championing the Open Credit Score initiative. But as we can see from the discussion today, we need to devote more attention to improving the checking account reporting system as well, and we are committed to doing just that. One key point we all need to grasp is how hard it is to live in this country without having some place to store your money safely and access it promptly and easily. Those who would like to have a traditional checking account but are unable to get one should be given a fair opportunity to manage their day-to-day finances effectively and affordably by other means, such as a lower-risk checking account or prepaid card. And so we envision a system that recognizes and responds to consumer needs by providing checking accounts and prepaid accounts that better fit their personal financial circumstances. This is good for consumers, it is good for responsible businesses, and it is good for the economy as a whole. Thank you.
Thank you, Director Cordray. At this time, I'd like to invite the panelists to take the stage, and while they're doing so, I'll briefly introduce CFPB and guest panelists. David Silberman serves as the Bureau's Acting Deputy Director and Associate Director for the Bureau's Division of Research, Markets, and Regulations. Cheryl Parker Rose serves as the Bureau's Assistant Director for the Office of Intergovernmental Affairs. Daniel Dodd Ramirez serves as the Bureau's Assistant Director for the Office of Empowerment. John Nevitt is Senior Manager of Family Stability with Metro United Way. Christy McCravey is the Director of Center for Housing and Financial Empowerment with Louisville Urban League. Jonathan Mintz is President of Cities for Financial Empowerment. Sandy Gogan is Senior Vice President of Retail Operations with Park Community Credit Union, Louisville. Ben Jurgens is Financial Empowerment Officer with Old National Bank. And Louis Goodwin is the President and CEO of Green Dot Bank. David, you have the floor.
Thank you, Zixta. Good morning, everyone. As Zixta indicated, I am the Acting Deputy Director of the Bureau, as well as the Associate Director for Research, Markets, and Regulations. And it's my pleasure to chair this portion of our field hearing on access to checking accounts. We're going to hear from a number of respected panelists who just introduced, include consumer experts and advocates representing communities from across the country and representatives from various financial institutions. Each panelist will give us some background and provide their perspective on checking account screening process and opportunities to improve access for consumers either seeking to enter or seeking to re-enter the banking system. After our discussion with the panelists, we'll then proceed with the public testimony component of the hearing, and we'll hear from audience members who have signed up to provide comment. So the Director Cordray, has already summarized the Bureau's report on access to checking accounts. I'm not going to take additional time doing that. Rather, I want to turn it over so we can hear from our distinguished panelists, who will talk about different strategies to improve access for consumers while protecting financial institutions from fraud and credit risk. Before we start the panel discussion, let me just note that you can access the report that the Bureau has issued today by visiting our website, www.consumerfinance.gov. So with that, let me turn it over to the panelists, and we're going to start from my left with John Nevitt, Senior Manager of Family Stability at Metro United Way. The floor is yours, sir.
Thank you very much for the opportunity to be here, and I would just like to share a few thoughts that I have in terms of the importance of this work today. You know, at United Way, we serve a vision of everyone reaching their highest potential, and we know that for kids to be successful, both entering school and graduating from high school on time and being prepared for college and work and life, that only happens if they're a part of a strong, stable family. And for a family to be strong, they need to be part of a strong, stable community. So one of the very important aspects of family stability to promote success in our community is around financial stability. And I subscribe to a model that's very simple, but I think really underscores the importance of this conversation today. And that is, if families have adequate income, which can come from a variety of sources, earned income, credits, benefit programs, once they have adequate income, do they have a vehicle to begin to save? And then finally, that saving is a bridge to gaining and sustaining assets for the rest of their life. And we know that income allows families to meet their needs, and savings and assets allows them to plan for their future and the success of their children. So underscoring those three pillars, if you would, for me, is financial education, how we manage our finances personally, and then also access to mainstream financial products and services. And that's what we're talking about today. I'm delighted to be co-chair of the Bank on Louisville effort. My fearless co-leader here, Tina Lenz, with the city, who's done such a great job of pulling partners together and keeping momentum, getting people into the financial mainstream. You know, when we started Bank On, the thing for me that really got my attention was over a working lifetime that an individual can spend as much as $40,000 using other types of financial services and products such as money orders, check cashing, expensive payday lending, things of that nature. And if someone's already starting out on the lower income of the financial spectrum and is being leached by all these other difficult products and services, they're never going to get ahead. And so we have an opportunity to improve that in our community, and we're already doing that thanks to all the financial institutions who are around the table, and many of whom are here today. So we think this is a fundamental piece for that longer-term stability that promotes family stability. I'd also like to say that, you know, we also talk about and bank on a win-win-win for our community. It's a win for the individuals and families who are gaining access to mainstream financial services and using that to their advantage. It's a win for the neighborhoods and the broader community that are often underserved and underinvested because there aren't traceable expenditures in those communities. This helps get those communities on the maps. And then finally, it's a win for the financial institutions and all the partners we have around the table. It's an opportunity for us to provide better products and services. So really appreciate the opportunity to be here today. Thank you.
Thank you, John. Christy McCravey, the Director of the Center for Housing and Financial Empowerment from Louisville Urban League.
Well, good morning, and thank you for having me and the ability to represent all the participants that come into the Louisville Urban League every day. And one of the things that at the Louisville Urban League we see is probably more than 80% of our clientele is categorized as low to moderate income. They are trying to stabilize their households, thus seeking our assistance in the beginning. However, many of their experiences and stories translate to why we are so excited about this announcement today. On my staff, I have a counselor who was previously a manager of one of our banks in town, and her branch happened to be in a low to moderate income area. However, her branch was one of the leaders in the entire system for generating fee income from overdrafts and NSFs. Tens of thousands of dollars had been stripped from the community because persons really did not understand how to reconcile their account. They didn't understand that when you call the bank and get a balance, that's not a true balance. So our goals at the Louisville Urban League have been to educate our clientele. And we are a Bank On member and a partner, and we put on numerous workshops to help persons to understand how to just reconcile their accounts. It's not taught in school. It's not taught at home because many of the families may not have had that experience as well. And in this day and age when the banks are downsizing and cutting back on expenditures, it's no longer as friendly to many people in the low to moderate income areas to walk into a branch to ask for assistance by sitting down at that desk and saying, can you help me to understand how to reconcile my account? We feel that this announcement today will help our consumers to be able to hold some of their wealth, to be able to retain that income, instead of feeling like they are being driven into the payday lending industry. It's amazing that we see a lot of clientele say, I know the expense there, even though they really don't understand that as the payday lending, as they roll over the checks over and over and over again, that the expense is growing astronomically. But they feel safer buying money orders, and a lot of our clients are not just unbanked, but many of them are underbanked. They will receive that direct deposit and take every dime out after every payday because they are going to buy money orders and do all of those things, or even pay in cash in order to make sure that they do not have the initial experience of mounting fees that result from having rollover transactions. So thank you on behalf of the Louisville Urban League and on behalf of our clientele.
Thank you. Jonathan Mintz, President of Cities for Financial. Jonathan Mintz, the President of Cities for Financial Empowerment.
Thank you. I'm really delighted to be here and appreciate not only the substance of why we're here, but also the excuse to come back and visit Louisville. So I'm delighted. I lead the Cities for Financial Empowerment Fund, which is an organization that works with mayors across the country to provide funding and technical assistance to help them build out financial empowerment programs and policies. This is an issue that is deeply important to the dozens and dozens of cities that we work with across the country. And what you're doing today is hugely important to the municipal financial empowerment field at large, as you just heard. Today is an important move. Banking access is a particular concern. As you noted, Mr. Chairman, there really must be real solutions. When tens of millions of people who can least afford it are spending billions of dollars to do what probably the rest of us in this room do for free without even thinking about it, to be able to pay bills, make purchases with the stroke of a pen or the swipe of a card or a few clicks online, to safely, usually automatically deposit our income and then access it for free, and even to create regular and free savings transfers. This is particularly important for local governments when residents are forced to turn to alternative, often predatory financial services. They pay more. And these are fees that they can't afford, and they are, as you just heard, draining money from not only families' pockets, but from communities. Worse, the lack of a checking account, which is the most basic financial tool, can derail other municipally led financial empowerment efforts. It's like the hole at the bottom of a funnel. And from the municipal consumer protection lens, people are more susceptible, of course, to predatory practices and predatory industries when they can't or aren't enter the mainstream banking relationship. Fortunately, I believe there is much to be hopeful about in local banking access efforts. First, there is renewed attention to these issues on the parts of regulators. Obviously, that's what we're doing here. And even in the financial services industry itself. This is exemplified, of course, by your leadership, and I still go back to your forum not too long ago on checking account access, and I'm so happy to see that next step today. I think it was a real turning point in this conversation, as today's announcement underscores. In addition, we are now happily at a critical point where the financial services sector is really putting forth better products that are truly starting to meet consumer needs and draw people into and keep them in the financial mainstream. And cities themselves have really taken on local leadership roles in banking access, pioneering local-led partnerships between public officials, city, state, and federal government agencies, financial institutions, community organizations that are working together in bank-on coalitions like here in Louisville to improve the financial stability of their residents. They're even starting to augment city services and social service programs, like, for example, Summer Youth Employment Program, into large-scale banking access opportunities. The CFE Fund works through our National Bank on Leadership to facilitate and advance these happily coalescing forces, and I'm really excited to talk a little bit more this morning about them, and grateful, very grateful to see the CFPB's strong support for banking access priorities. Thank you.
Thank you. So now we'll move to my right, and Sandy Grogan, the Senior Vice President of Retail Operations at Park Community Credit Union.
Thank you so much. I'd like to first thank the CFPB for inviting us to be here today to represent the credit union industry, and particularly to the director. We appreciated your comments earlier. I'm proud to say that I've been with Park Community Credit Union for 27 years now, and one of the things that I get to see every day is the incredible difference that credit unions make in the lives of the members that we take care of. We've been, at Park Community and other credit unions across the state, I know have provided accounts just like the ones that we're talking about today, that have access to member accounts through an account with no courtesy overdraft. We do give members access to debit card transactions, unlimited debit card transactions, transactions at ATM machines all across our network. We started an account called Fresh Start several years ago, very similar to the time when Bank On first came to the community. And we put this together as a way to offer those accounts for those underbanked community members that you talked about. We've worked with the community on financial literacy. We've talked to people about how important it is to establish a good relationship. And one of the things that we've done as well, and credit unions in general are really good about, is educating the members on ways to avoid fees, on ways to not have fees. And in most cases, credit unions are already offering these type of accounts. I do think the courtesy overdraft has a place in the financial services industry, and we offer those as well. But the accounts that we offer, particularly for the underbanked, is just a part of the overall credit union philosophy of people helping people, which we've been doing ever since credit unions started. So I just want to thank you all for having us here and allowing the credit union industry to be a part of this. I think that you'll see more and more credit unions stepping forward with these type of programs, and we're happy to be here and to be a part of that. Thank you.
Thank you. Ben Juergens, Financial Empowerment Officer for Old National Bank.
Good morning, and once again, thanks for having us here today. Old National Bank is headquartered out of Evansville, Indiana, and have a large presence here in Louisville as well. We're a $12 billion community bank, and being the bank's financial empowerment officer, I spend the majority of my time working with our at-risk population and also our student population to really help give them sound advice to prevent things from happening to them in the future in the example of predatory lending and high-price banking. I focus a lot of time and energy with them creating programs to deliver education, to empower individuals, allowing individuals I work with to help me really understand the products that are best suited for them. For example, we did create a program at Old National called the 12 Steps to Financial Success. This was primarily targeted at at-risk populations, specifically those that are incarcerated for nonviolent offenses. And we really encourage them to help take control of their future and to achieve financial success over a 12-week financial education program. We also encourage them to really empower others when they leave and re-enter society. It was nationally recognized just last year through the ABA's Community Commitment Awards for Financial Education. And a big portion of the population that we reach through this are individuals that have had negative items in the past due to overdrafts or what it may be. Individuals may have never used a bank before and really struggled to understand how mainstream banking operates. During these classes, we actually poll our audience and ask them, what is it that you want to see in products and services that banks have to offer and credit unions have to offer? We find out what features of a checking account would be most beneficial for them. In essence, we really use their answers to develop our future products. At Old National, we believe in dedicating our resources to utilize their expertise, not only to drive education, but to utilize to develop the products and services to best suit their needs. And I look forward to talking about some of the products that we have to offer here very shortly. Thank you.
Thank you. Finally, Louis Goodwin, President and CEO of Green Dot Bank.
Thank you, Dave. And thank you for the opportunity to be here today at the CFPB field hearing. As background, Green Dot Corporation is a bank holding company and is the owner of Green Dot Bank. The Green Dot Bank is a state member bank, and it's regulated by the Federal Reserve in the state of Utah. And Green Dot is a company that is headquartered in Pasadena, California, with over 600 employees. Our core product is the Green Dot card. That's a reloadable prepaid debit card, and these cards can be used to make purchases, pay bills, get cash, and access funds. And it's just like any other traditional debit card. Our prepaid products typically appeal to lower income Americans, the unbanked and underserved, and usually with income levels under $50,000. Green Dot cards can be reloaded and purchased at 100,000 retail locations across the country and online. And today, Green Dot is the largest provider of this space, the prepaid space. We are also into mobile banking. GoBank is our mobile bank account, and GoBank is really the first account that's designed and open to be used totally on the mobile device. Each GoBank account is a checking account with a linked debit card and also an account called the Money Vault, which is another linked account which helps our customers save their money. We also offer a free large ATM network, user-friendly interface, budgeting tools, P2P payments, mobile bill pay, and paper checks, and remote deposit capture. All are accessed through the mobile phone. With all Green Dot products, we have a customer covenant, and that is that we have clear disclosures, no minimum balances, no penalty fees, and no overdraft fees. We simply don't pay and authorize the customer to spend into the overdraft. In addition, all cards are FDIC insured and carry Reg E protections. And they all require customer identification through the U.S. Patriot Act, and direct deposit is free and immediately available to the customer. We do not rely on credit checks or services like that, and these accounts do not feed into those reporting systems. Green Dot's mission is to reinvent banking for the masses, and it's designed to be a simple, inexpensive, and feature-rich account with true value and utility. We believe that all Americans should be able to access and benefit from the security and convenience of a low-cost, safe, and regulated FDIC-insured account so that they can manage their money. And we believe that this is fundamental to the growth of the overall economy, to the consumers, and the banking system. Thank you for letting me participate today.
Thank you. I want to thank all the panelists for their thoughtful remarks and also for staying within a 3-minute time limit. That may be a historic first, not only for the Bureau, perhaps for the history of the world. So we're now going to have some opportunity to engage the panel in a discussion, and my colleagues Cheryl Parker Rose and Daniel Dodd Ramirez will join me in that. But I get to ask the first question, and we'll go back to you, John, since you've been, it's been a long time since you've had a chance to talk. So let me just ask you to elaborate on what you see as the consequences for people who don't have a checking account or lose a checking account, and the role of nonprofit organizations on the ground in helping consumers identify and manage products that are right for them.
Well, thank you for that question. You know, and to me, it all comes down to access, convenience, and cost. You know, we've already talked about some of the cost factors, and certainly one of the driving motivations, pardon me, for forming the Bank on Louisville effort in terms of transactional costs. But just the time, access, convenience factors are huge in and of themselves. And I'll just give you an example, particularly if we're talking about the part of our community that tends to be most underrepresented with mainstream financial products and services. If you're talking lower income and minority populations, often if there is a single parent household, and I am an example of that, I have two teenage children. My daughter just started driving, so a little bit of the pressure's off in one way, but it's gaining in other ways, if you understand. But, you know, I can only imagine, you know, my schedule, running my kids back and forth, taking care of when medical issues come up. If paying bills were so much more of a struggle for me, how difficult that would be. You know, I'm very fortunate because I have a good job. I work for a flexible employer. I have reliable transportation. But if I didn't have the access to a good checking account, access to my money immediately, online banking, all those things that I've taken for granted, I can only imagine how much more difficult my life would be. So I think those very simple things are just magnified in particularly different segments of our community. And so to be able to have that fundamental piece is just critical for a family's stability, let alone just the emotional aspect of not having to deal with the stress of running around, check cashing to pay bills, money orders, et cetera. You know, and in terms of the role of the nonprofit sector, and I'm sitting next to a great person here that works with clients directly every day. Nonprofits are trusted organizations within communities. We have some very strong nonprofits here in the Louisville community. When people access those services in our community, it's a very teachable moment. It's an opportunity. They're coming to us because they have a challenge. They're looking for us to support them. So the better we can connect them with mainstream products and tools, the better equipped they're going to be to handle those issues as they come up in their lives. And when a trusted person says, yes, you can trust these financial institutions, we vetted and screened these products, they're part of this Bank On movement, it means a lot to them. And particularly when we have those relationships, which this has allowed us to forge with individuals within those financial institutions, we can make those direct, what I would consider warm referrals that really tend to make a difference for folks who are not accustomed to different processes and systems. It becomes much more friendly and an opportunity for us to really ultimately serve those families and then create that stability that we all look for. Thank you.
Thank you. And offline, you and Director Cordray can have a conversation about the joys of having a newly minted teenage driver, or in the director's case, actually 2 newly minted teenage drivers. And the joys of insurance bills yet to come, right? Let me now turn to Daniel Don Ramirez for the next question.
Okay. Thank you for your earlier comments, Sandy. And you spoke about Fresh Start, the Fresh Start product and financial literacy. What other options, you can feel free to talk about those as well, but what options, including product choices and other services, can financial institutions offer to help consumers manage their spending?
Thank you, Daniel. I keep forgetting my microphone. Well, first, I do think that education of our members is the very first step. I think that you have to start with just the basics of what is a savings account, how do you save your money, what's the best method to do that. And I think credit unions at our core, that's kind of what we've always been good at. We think that promoting thrift is where we started. And even as young as we send our teams out into the communities, and hopefully those of you from Louisville have seen us out and about, and we talk to, even at kindergarten age, and talk about saving money and giving piggy banks to them and talking to them about bringing those to the credit union, and we'll count those for you and we'll put those in your account and we'll give you prizes for doing that. Those kind of things, while they seem so small, really do, it's where that foundation starts. It's where it all begins. From that point, we offer products that are savings vehicles for children's certificate accounts, and we work with them and we talk about those and we celebrate those when the kids come in and open those types of accounts. We spend a lot of time in our community and we offer our services to all different groups. We're happy to come out and do financial literacy programs. And Christy, you had mentioned that people don't, we don't teach in our schools how to balance a checkbook, which it's appalling. It is such a basic and fundamental thing. And where all of us in here probably don't think a whole lot about it, or we're online and we balance our accounts every day or know our balances every day and understand that, the average kid in high school does not understand how to do that. And we make that available as just a part of our package of programs that we put together. We also talk about, we've also been asked even to go at the college level to do sessions and different classes and just to be a part of it and to explain how important good credit is and not overspending your account and how that's going to follow you, to your point, Director, for 7 years on their credit bureau, and how important it is to keep your credit clean as you can. Some other things that we've looked at are the prepaid debit cards, and at this point we've opted not to go with those simply because the checking accounts that we offer we feel are a better way for members to use it. They have access to debit cards or to checks, online banking, and all of those types of things that we really try to promote. Some other things that I think that we've kind of looked at is and the consumers have available to them and maybe that they can use to help keep them on track is looking at their credit bureau and getting their credit bureau scores and always trying to make sure that they keep that credit score clean if they can. And to your point, looking for ways to, if there is something on there, how do they get that off of there? I think that, I know that our credit union, we look for ways to help members. We'll help them walk through that process. If they have a hit on check systems, if they have something on their credit bureau that they're disputing, we can walk them through how to do that. And I think credit unions in general do that. So hopefully that answers your question. Mm-hmm.
Thanks. Cheryl?
Thanks, David. Christy, I have a question for you. What are some of the challenges that your clients have faced accessing checking accounts? And in answering, Sandy has done a wonderful job talking about the kinds of services and educational opportunities that they provide. But I was wondering if you could also, in answering that question, tell us what the what the Urban League has done to help navigate those challenges.
Thank you, Cheryl. As far as access to the checking accounts, we've seen the challenge because, well, we've seen the challenge of having a bad history. That is primarily number one. Some persons, of course, their incomes are very low, and they don't have the room to, when you have a multiple rollover of fees, they don't have the room to necessarily pay their bills and go back and take care of the banking account, so thus they get into the check system which is the system that prevents them from opening another account. At that point, if they seek help, and that's a big if they know about Bank On, and we've tried to make it well known across the community about what we do, but of course, nonprofits and government don't have a lot of advertising dollars. So if they know, and if they come in, we can help them navigate that system. We do financial education workshops that when they get a certificate for completing, they will have access to another account with one of the member organizations. We also hope that we explain enough to them. Many of them come in wanting to buy a home, but they don't understand how the checking account correlates into additional banking services like access to credit. And one of the things that is really hard for some to understand is that the money that is going to be used for down payments and things like that must be in a bank. It can't necessarily be on a prepaid card. They want to see statements. We like to help them to understand that it must be in the bank. But there is a real distrust for some of our clients. And so we have to, just as John mentioned, we have to really handhold and help them to feel that there are trusted members, trusted partners. They've sought help from us. There are people that they can work with and that really understand that behind the account number, there is a real family, there is a real situation of just like all of us trying to get our kids through school, trying to pay your bills. Most people want to pay their bills and live comfortably. It is more of a struggle for the clients that we see. They're not being deadbeats. Something happened and it rolled over and had a domino effect, and now they have another costly bill. So just like maybe a medical bill, because the lights and gas are more expensive, it's put on the back burner, and someone has to go back and look at it later. And they don't realize that this is going to impact them for a number of years. So the main thing that we want people to realize, and we want our banks to realize, is that people don't really set out to just overdraft their accounts intentionally, most people. But they really have made a mistake, and that we feel that it is our role to help them to get back into the system, but to understand how the system works so that they can navigate in the future. The other big thing is that they didn't understand that the big check that they wrote was going to clear first, and the little checks that were there all went into insufficient funds and therefore also caused a lot of significant fees. So we help them to understand that and to help, hopefully, to avoid those things in the future, thus giving them access to future accounts like a credit card or the home or the car loan. Thank you.
Thanks. So let me switch this here. Ben, assume you have a consumer who comes in, wants to open a checking account, and you pull a screening report, and the screening report comes back with negative history. And let's assume, for purposes of this question, that the report is accurate, and in fact there is a consumer who's had difficulty in the past. What kind of alternative financial products can financial institutions, can banks offer to that kind of customer?
Great question. And first of all, what I would do is recommend financial institutions in general just to have a inclusive product suite, a variety of products that will help those that have been impacted with a negative screening report. First of all, I think that having a basic checking and savings account is essential. It's really the first step in getting someone's finances in professional order. For those that do have the negative screening report, I recommend and encourage banks and credit unions to have an account, in my mind, one that offers something like a checklist account, which is what we have done recently, and a lot of the banks are starting to do as well. Many with an unfavorable history with banks through educational outreach and discussions is checks have been the one instrument that has gotten a lot of people in trouble, not understanding how they or when they clear and at what point does that leave their account, et cetera. And then they start to receive additional fees and charges that further negatively impact their history. So being able to offer an account that virtually eliminates any chance of overdrafts is one that we recommend and a lot of banks are starting to do. Being able to offer this type of account is one that will have no overdraft fees, period. One that does offer online banking and mobile banking. Mobile banking is one avenue that we see a lot of our unbanked and underbanked families really use that smartphone as a platform for their everyday use, so that is highly encouraged as well. Offering an alternative to checks. We do have to pay bills, and we need to offer a way to do that. And what we've done, and what I recommend or encourage, would be to offer another avenue to make those payments, whether it be through bill pay, whether it be giving free money orders to each individual that opens the account, and also offering a no minimum balance requirement, very low cost to start the account, and most importantly, having no monthly fee. In my opinion, it's extremely important to tie financial education when opening these products. As I drive education throughout our entire footprint day in and day out, I see that the education is very, very important. Utilizing programs like Bank On, working with our schools and our colleges, spend a lot of time just teaching them the very basics. What I have been accustomed to be, second nature. I realized a lot of individuals that go through these and have rough histories with previous checking accounts, they really just didn't understand the basics. So it's taking the time to make sure that they do understand how the product works and how it operates prior to opening. Create products coupled with coaching to help change habits in a positive aspect is very important. I think other products that could be offered in this inclusive suite would be those, check cashing services, getting into the bank at an affordable rate, not having them pay the high price that they may be doing elsewhere, to really get them comfortable with coming into a financial institution. Also looking at the opportunity to do small dollar loans at a very affordable interest rate to help get individuals out of the payday lending cycle that they may be in. And then also products that help individuals build credit. Credit's one thing that's needed every day. As we grow older, we come to find out that it's not just getting the loan at a low interest rate, but we're talking about getting your first house, getting a cell phone, getting an apartment, helping them understand through educational outreach the importance to do that and having products to do that. For example, a first-time borrowers program. So those are some of the products that I would recommend for financial institutions to look at that we've seen having great success with reaching that particular audience.
Great, thanks. Daniel?
So, Jonathan, you spoke a little bit about this earlier, but could you describe more work, the work that the Cities for Financial Empowerment has done while working with banks to develop products geared to help consumers, including those first entering or regaining access to the banking system?
Thank you, Daniel. I think good intentions and great partnerships are the right starting point, but it's the standards, I think, and the details that matter. So in October, we released the Bank On National Account Standards for 2015 and 2016. These standards were forged over many, many months, working with a bunch of key partners, including Federal Deposit Insurance Corporation, financial institutions, local government leaders, consumer advocates, and more. These standards specifically call for and enumerate low costs, low fees, and most importantly, no overdraft. But at the same time also call for critical functionality of being able to make purchases and pay bills. We see these standards as a realistic high bar, as a starting point for Bank On priorities and partnerships. We're really delighted that 3 national banks now offer accounts that meet these standards: JP Morgan Chase's Liquid Account, Citi's Access Account, and Bank of America's Safe Balance Banking Account are available today in close to 11,000 branches across 41 states and the District of Columbia. Wells Fargo also announced in October at our release of the standards their commitment to bring the Easy Pay card to their 6,200 branches nationwide by June of this year in response to the Bank On standards. In addition, our Bank On coalition partners are now working with regional and local institutions like those in the room today across the country to encourage them to create or to grow or improve products that will similarly meet these standards. Federal regulators like yourselves have been showing their support in addition to the welcome attention today, and particularly to the Consumer Reporting Agency concerns that you've brought to bear. The Bank On movement is also working with regulators around Community Reinvestment Act opportunities, which we think can help incentivize account opening on the part of financial institutions, as just one example. I think that the progress of these efforts is exciting, but also potentially threatened by a number of issues that are relevant today. Overdraft in particular, we've talked about and you'll hear more about. The fees associated with overdraft is a key reason that consumers avoid the mainstream banking system or exit the mainstream banking system or get stopped from returning into the mainstream banking system. We're really delighted to have partnered with the 4 national banks on robust accounts that eschew overdraft altogether. We are hopeful that the CFPB's steps today to help sustain and spread that important progress will continue. But locally, we continue to hear on-the-ground concerns, as I think you started to hear in the panel and may hear more about, regarding opt-in engagement oversight, fee proportionality, clearance sequencing issues, like Christy just mentioned. Our primary overdraft focus is on the outsized role it plays in negative reports in the account screening consumer reporting agencies, as the director has mentioned. We just recently released a report at the CFE Fund along with the National Consumer Law Center that highlighted a number of troubling issues with these systems. You've laid out some of these pressing concerns. We believe they systemically include what you focused on most today, I think, which is the accuracy of the information they contain and how they resolve those inaccuracies. But we also think it's important to be talking about and making progress on the lack of consistent definitions across and even within financial institutions, the lack of proportionality between consumer behavior and financial institution response, and the absence of or the lack of transparency in how financial institutions both report information on the one end and then use the information on the other. Of course, from my lens, each of these issues matter not only so that consumers who are entering or re-entering the banking system can do so easily, but also so that local governments who can wield the power of payment streams and social system delivery can responsibly connect people into accounts that meet these standards and to do so with comfort at scale. Particularly, as the director mentioned, with the market moving towards products that exclude the possibility of overdraft, the consumer reporting agency overdraft overlay really needs to be improved.
Thank you. Cheryl.
Yes, Louis, how do you see financial institutions modifying their products and practices in the future to enhance account access?
Great question. So Green Dot is virtual. We have one bank branch, and we don't really do the nationwide business out of there. So I think it's a critical question to understand and help financial institutions understand what practices could be changed. I think that many people go into the bank branch, as was said earlier, they don't know what their position is. They don't know if they're good or bad in the check reporting systems. And when they would go there, they would find out that they did not qualify, and it was simply a no. There is no other option, and they didn't feel welcome. And not only did they not feel welcome, but they didn't want to go back there at all, and they would spread that to other people in the community to say, boy, they're not friendly to the needs of me and probably not you. So I think one of the key elements that I would encourage financial institutions to do, and you've heard it around this room in several ways, is that if there is an element that comes up in those reporting systems, there has to be another product that can allow them back into the banking system. We certainly provide that to customers where they feel comfortable going into retail locations. They shop there, they're comfortable with the clerk, they know, that's their comfort level. And that will continue to be something that we market through our retailers. But banks really need to be able to concentrate on being able to say yes and help through education that Ben brought up and allowing the customer to say, yes, this is a place that I should be and that I belong and that I can advance if necessary through the various steps. I mean, a bank certainly has to be able to protect themselves against fraud, but that really has to happen really in the customer identification process. You really have to make sure that you know your customer and you help your customer. You help them achieve what they want to do and put them in a product that makes sense for them to be in. So that would be my encouraging thoughts for banks, to make sure that they have products available if the normal products do not fit.
Thanks. So I want to give all the panelists one last opportunity for any closing comments or observations they have on strategies that can be employed either to improve the checking account screening process or more broadly to enhance access to consumers to these kinds of products in a way that is safe for them and safe for the financial institutions as well. And why don't we go in the same order in which we started? Start with you, John.
Well, I think we've hit on a lot of the things already, but I think of ensuring that accuracy of the reporting and screening processes, having something that's consistent and transparent. That's all part of both individuals and us as community-serving organizations, an opportunity for us to learn so we can help educate the public. And I also think about products, and we've already talked about Start Fresh, but a vetted financial education curriculum that's really teaching folks the most important aspects of having and managing an account effectively, and the financial partners who are around the table who are fully participating in that is a great opportunity for us to say, hey, look, if you've made a mistake in the past, you didn't really understand how it worked, you do have a second chance opportunity here, and this is a tool that we can use in our community and share with others who have an interest. Thank you.
I'll just build on what John said. I think one of the main things that we would encourage the banks to think about is that when someone comes into that branch, they are a potential customer for life. And this could just be one of the stepping stones to access to many additional products if it is done correctly. But the impact of the clearance process, the impact of delaying the availability of funds, those impacts can have a lasting effect. And it's not only the effect on the family, but it is stripping the wealth from that community in order to stabilize. So I would just encourage that we look at those impacts, we educate our customers and our client base, and we encourage our personnel to, someone said it down there, find a way sometimes to say yes or not now instead of just no.
I think that there are two key interrelated and equally important sets of strategies. One is regulatory reforms, and the other is industry self-reform that account screening, consumer reporting agencies, and financial institutions can take, and in some cases are beginning to undertake. Through either or both route, financial institutions need to speak the same language, and they need to use the same criteria for when and how negative events get reported. Consistent, narrow definitions and reporting standards reflected in an industry-adopted data dictionary would go really far, I think, in making this a reality. Regulators could also create and enforce clear, transparent standards for how financial institutions respond to negative events, including stronger regulatory guidance on accuracy and error resolution, as the director mentioned earlier, which I think is a real critical first step. The account screening agencies and the financial institutions that use them also have a significant role to play. Account screening agencies can work with their clients, the financial institutions, to invest in reasonable investigations in response to consumer complaints and to correct those errors when they are found to have occurred. And financial institutions themselves, many of whom genuinely want and are working toward a better account screening process, can play a critical role. They can limit account denials only to consumers with an actual, narrowly defined history of fraud, which is really the basis for the program in the first place. And they can make better usage of products that they have to support expanded banking access. As you've emphasized today, for accounts like those that meet the Bank on National Account Standards with no ability to overdraft, then a history of overdraft frankly shouldn't matter. The bottom line is expanding banking access will take a concerted effort on the part, I think, of multiple players, the regulators, the institutions themselves, financial institutions, advocates, nonprofit leaders, and the account screening agencies. And I really just have to say that I think opportunities like today's steps and this hearing point to a real groundswell of momentum that gives me lots of hope and encouragement. Thank you.
Thank you. Sandy?
Thank you. I think that one of the things, too, that we can look at in terms of checking account screening process and the access to checking accounts is that balancing the factors at a financial institution. You know, we look at, should we screen, should we not? How do we offer accounts and mitigate our risk so that we can continue to offer those? And I think that balancing these factors can sometimes be difficult, but it becomes easier. It's not as easy to just weigh the factors towards reducing the risk, but what we think makes us different is the mission that we have to make sure that our members are successful. So in using that to drive all of our decisions, how do we improve the screening process? Well, first off, it's to provide the accounts that we've talked about by not using these screening mechanisms to determine account opening. And excuse me. And as a financial institutions, we have to offer accounts that don't utilize the third-party reporting systems at all. And using our Fresh Start accounts, we use these as temporary accounts. These aren't an account that are designed to keep people in for long periods of time. It's an account where they can establish some history with us, where they can use the account for 6 months. They move to another account that allows them more access to just the normal account that you and I use every day. So, and these accounts are not designed to earn income for the financial institution. They come with risk. As I've mentioned earlier, you know, our Fresh Start account, we have limits of not allowing the overdrafts and helping the consumer to become more successful. Another area, I think, is to market these products. You know, we have them, and someone on the panel mentioned that if you, I think it was you, Director, who said that out of all the 25 that you looked at, that 8 put it on theirs and 7 were hidden someplace else. You know, we're kind of proud of this account. We use this as a way to help somebody start their banking relationship and to get into the mainstream that Ben talked about. You know, it's one thing to have them, but if you're not marketing them, who's going to use them and how do they even know? You know, so in the products that we've used, you know, what have we experienced with these? You know, we have placed more people in these accounts that then move them forward into other relationships with us, the lending suites that we offer, and to give them more, make them more financially independent. You know, I think that we can take for granted that a checking account is so easy for us to use, but for people who have had an issue in the past, getting through all that red tape is very difficult, and having access to financial services shouldn't be something that's considered a privilege for the everyday person, and just for the middle class and above. It needs to be for all consumers, and I think that the end result of that is that the one thing I would suggest is that the main thing that's going to impact this is the desires of the financial institutions to help and to get on board, and some of the things that we're talking about and that the CFPB is doing, I think, is helping to channel that and to make that move forward. So thank you.
I think one of the biggest things that we can do, and I've talked a lot about education, but in this answer I'm going to talk a little bit about a different form of education. That's the education of our financial institutions' employees. I think it's really essential to make sure we're putting the clients in the right products that are right for them. Teaching our frontline employees, you know, what to look for, key questions to ask, and once again, recommending the products that's best for them. Educating the client on how the account actually operates and how to avoid fees and being proactive in that essence. So continue to educate on a regular basis to the front line is essential. Financial institutions may have some turnover on the front line, as that is one of the positions where we see that most often, and I think that continual outreach to make sure that they're aware of the products that are all the product suites that are out there, and making sure that they're giving the client the best one that's fit for them. Our financial empowerment philosophy is to attempt to provide financial education prior to an individual developing poor banking habits, and it's essential, in my mind, to be proactive in this case instead of reactive. We also want to provide suggestions and recommendations on how to rebuild an unfavorable banking history. We want to do this by partnering with nonprofit organizations that have programs to assist those that may be unbankable. Last thing that I would suggest we do is put individuals, or the last thing that we want to do is put individuals in the wrong product type. We really want to limit the opportunity to set them up to fail in the future. We want to give them the right account first and foremost. Reduces risk for them and reduces risk for the financial institutions as well. And then, as you mentioned, Sandy, along the lines of marketing the product, I think it's really essential to, through educational and community outreach and marketing, to let the public and the community know the products that are out there, and then when we can get them in, to educate them on how to best use those to set them up for success in the future rather than to possibly fail.
On a completely non-precedent basis, Lou, you get the last word.
Excellent. Certainly, listening to the panel and the comments around the room, one size does not fit all. We understand that there are various products, there are various ways that we, as an industry, should be able to provide, this access to the customer. I look at financial institutions as a bank or a credit union, and to be able to have FDIC insurance or NCUA insurance behind your name, that's a responsibility for us as bankers and credit union leaders to allow access to all consumers that need that comfort and that assurity that their money is safe. And so we shouldn't be withholding from the general consumer in that way. And what we should always provide and strive for is a fair and transparent view to the customer so that they understand the account that they have, that they understand the fees and how they will interact with this account going forward, and to provide real-time information, as was brought up earlier, to be able to help that customer know right now how much money I have in my account, what's my balance, and real time is just critical, especially in this area. Banking is certainly changing. How people access banking is very different. We are a total virtual bank in the fact that they can come online to us and from their mobile device open an account. That changes the interactions. That changes how you look and how you deal with your customer. And I think that it's a challenge that we should look forward to and see how we can bring more people into the banking system and provide the education needed to fulfill that.
Before we move on with other pieces, in listening to this discussion, I wanted to make a point, which is, as I listened to this panel, pretty unanimously of the view that opening up more tailored product potential to more consumers is good for everyone. I'm reminded that for a number of years, it may be the case, it seems to be the case, that there were many financial institutions that were quite content and complacent to settle for the system that we had. I think on the thinking that this marginal customer was not important to serve that marginal customer because they were and always would be just a marginal customer, and it wasn't really economic or necessary to dig deeper. First of all, I think I hear people here saying that that's may well just be wrong, that there are plenty of so-called marginal customers that if they could get into the banking system and have the advantages of that and not be whittled away at all the time in terms of how they manage their money, may have much more opportunity to succeed. So the marginal customer, judged as such, maybe was never as marginal as they needed to be if they could be within the banking system. The other thing that occurs to me is that, there was a statistic I saw the other day that was rather startling, which suggested that in the next, foreseeable number of years, something like $30 trillion will be intergenerationally transferred through inheritances from older Americans to younger Americans. So the judgment that's being made now about who's a marginal customer, if you can get those people in the banking system and earn their loyalty, they may well become faster than you think, much more than marginal customers, let alone what they may be able to accomplish through the fruits of their own merits as they prosper and benefit economically.
Thank you. So this concludes the panel portion of our field hearing this morning, and I want to ask you to join me in thanking all of our panelists for their thoughtful and thought-provoking comments. Now, I'll invite the panelists to resume their seats in the audience, and I'll turn the program back over to my colleague, Zixta Martinez, our Associate Director for External Affairs.
Thank you, David. Please join me in another round of applause for our terrific panel. An important part of how the Bureau helps consumer finance markets work is to hear directly from consumers, from industry, from our state and local partners, and from community advocates across the U.S. One of the ways the Bureau gathers public feedback is through events such as these. We have held field hearings, town halls, and other events across the U.S. from Miami, Florida, to Itta Bena, Mississippi, to Seattle, Washington. At these events, we not only hear from experts in the field, we also invite the public to participate. But before I open the floor for comments, I want to remind folks that there are several ways that you can communicate your observations, your concerns, or your complaints to the CFPB. You can file a consumer complaint with the CFPB through our website at consumerfinance.gov. Our website will walk you through the process for filing a consumer complaint about a financial product or service. The CFPB takes complaints about mortgages, car loans, payday loans, student loans, or other consumer loans. We take complaints about credit cards, prepaid cards, credit reporting, debt collection, money transfers, bank accounts and services, and other financial services. If you don't have a specific complaint but would like to share your story with us, we have a feature on our website called Tell Us Your Story, where you can tell us your story, good or bad, with a consumer financial product or service. Your story will help inform the work that we do to protect consumers and create a fair marketplace. We also have another feature called Ask CFPB, where you can find answers to over 1,000 frequently asked questions about consumer financial issues, as well as additional resources. I encourage you to visit consumerfinance.gov to learn more about the resources and tools that the Bureau has developed to help consumers make the best decisions for themselves and their family. Now it's time to hear from members of the public that are here today. A number of you have signed up to share comments and observations about today's discussion. The public comment portion of the field hearing is also an important opportunity for the CFPB to hear about what's happening in consumer finance markets in your community. Each person who signed up to provide testimony will have 2 minutes to do so, and what we hear from you is invaluable. We want to hear from as many of you as possible, so I encourage you to try to observe the 2-minute limit so that as many folks as signed up to provide comments have the opportunity to do so. Our first commenter is Heather Clooney. Ms. Clooney, if you will just wait, either Chris or Gary will bring a microphone to you. Right there. Oh. Go. Okay. Okay. Benita Freeman.
Hello, again, my name is Benita Freeman, and I just wanted to make a comment about the overdrafts. One thing I've learned is I'm come from banking, and you have clients that have been with you for 5 years or more, and they're not getting approved for overdraft protection due to maybe slow credit or something like that. But they've been banking with you for more than 5 years or more with good income coming in, and then you have NSF points, where they still pay up to $200 to $300 to $1,000 worth of bills for you, but charge you overdraft fee for everything that comes through your account. If you're allowing them to get NSF points and charge these fees for overdraft, especially in low to moderate income family areas, why wouldn't you extend them the overdraft protection? You're already paying these bills. Just from experience, mom and pop store been in business for years. Just because I know this, I know a client that's been in business for years. They paid over $17,000 in overdraft fees within a year. What had happened was they had good government contracts, but their funds wasn't available. But every Friday, this client would pay his payroll, pay his his employees, 6 to 10 employees, like $150 to $200, every week, because that's what they made. And instead of them giving them this overdraft protection to pay this fee, well, they got 6 to 10 overdraft fees of $36 until those funds became available, which I think is ridiculous. So if you have people that have this money coming in your account and you're giving them NSF points and paying up to $1,000 worth of bills, but you want to extend them overdraft protection, that's where the money's being lost. And that's money that the family's losing, that they could have. And then that's why they go out to these payday lending places, because they rather get an extra $200 or $300 to pay their house note or their electric bill and get that one fee and go back, instead of getting this $36 fee, and then you're getting paid $7 a day every day until you get paid again. That's too much, and then you can't recover. So they really need to look at how long people have been with them. They're extending these NSF points. Why can't you extend overdraft protection also?
Thank you very much for your comments, Ms. Freeman. May Bixner? May Bixner?
That was passed.
Anne Marie Reagan?
My name is Anne Marie Reagan. I'm an attorney with the Kentucky Equal Justice Center. We're a statewide advocacy group for low-income Kentuckians. And I also worked for many years at the Legal Aid Society in Louisville, so I've seen the whole gamut of consumer issues, including inability to access a bank account, mortgage foreclosures, and the whole bit. But it's very true, which you all have talked about, that we do not teach our children how to deal with their financial issues. It's a very important point. All of us, none of us are taught that information. And so people don't understand how they're, even if they have a bank account, they don't understand how it works. They don't understand the overdrafts. They don't understand how their credit report works or how they can fix something on their credit report. And so all of the steps that you're outlining today, I think are really terrific, and I'm very supportive of what you're trying to do to increase access to low-risk accounts that people can use and not get into this continuing cycle of trouble. And also, it's very important to ensure accuracy of credit reports. I find it very encouraging also by what the Bank on Louisville folks have done here in our community to allow people to access bank accounts, and also what the financial institutions that were here today talking about the very positive steps that they're taking to increase access to bank accounts. Thank you.
Thank you, Ms. Reagan, and thank you for the work you do in your community to help consumers. Jimmy Mills?
Good afternoon. My name is Jimmy Mills. I'm co-president of an organization here in Louisville called CLOUT, Citizens of Louisville Organized and United Together. Our mission is to bring about change in unfair justice system, to bring justice to people who can't bring justice for themselves. A few years ago, when we discovered the problem of predatory payday lending, we launched a campaign to bring about a cap to payday lending. But before we got to that point, we also discovered that there was a product called Bank On in other places that we felt would be working well here in Louisville. And I'm glad to say that Bank On Louisville is alive and well. I'll commend all the banks and credit unions for their effort, and I encourage them to go forward and let the public know that the product is available. And it's just a pleasure to hear that so many people are involved in the Bank On program, and it is bringing about change for thousands of people here in the Louisville community. Thank you.
Thank you, Mr. Mills. Debbie Painter? This is a shy group. Sharon Felton?
Thank you. My name is Sharon Felton, and I'm with the Cooperative Baptist Fellowship, and I'm a minister at a church in Georgetown, Kentucky. And we are very thankful for the work that you've been doing. And we're working with pastors and congregations and collecting stories and preparing people for the comment period for when you produce your ruling. I want to tell you about a family in our church who had multiple loans, had to take out the payday loans. They cannot pay the loans every week, so they were rolled over and rolled over. They had direct access to their bank accounts. They eventually had to close their bank account, checking accounts, and change banks so that they could control how the money came out and who got paid first. So I appreciate the work that you're doing and all the things that you've brought today, because I think the overdraft charges are one of the problems that they had. And so the work that you are doing will help them and will help other people who are caught in payday loans. So we are anxious for the rulings to come out, and we will support you in any way that we can. So we appreciate your work.
Thank you, Ms. Felton. Joy Boyd.
Hi, my name is Joy Boyd, and I work for the illustrious Tina Lenz and Eric Freelander with Louisville Metro Community Services. And I go around to communities and I teach financial literacy as well as Start Fresh classes. And the one thing that I love doing is going out to the community, because there is a lack of knowledge around low to moderate income individuals about the banking products that are out there. I enjoy teaching the classes because I teach them that banks are different. So the big banks may not be the one for you. So you want to shop around for your bank to make sure that it fits you like a glove, instead of being in a bank that you really don't need to be at, because they don't offer the products that you need. A lot of clients have difficulty opening checking accounts because they're in check systems. They're in check systems from when they were 18 years old. They haven't done anything else since then because they can't get a bank account. But they're getting their paychecks on these pay cards. And every time they swipe, they're getting a charge. They get a charge to check their account. They get a charge for spending it at the store. I don't get a charge to check my banking account. I don't get a charge every time I swipe at the store. So I talk to clients really about our partnerships with the banks that we have, so they can get in the banking system, and I let them know about to talk with their bankers, to talk to them and get to be their friend, so they can learn about products that come out, and also don't be ashamed to talk to them about what you don't know. Because a lot of families, children, adults came from single parents who were more into trying to take care of the household than to teach them about savings and banking and checking account and how to do all that. So now with the Start Fresh class, I enjoy doing that, because the products that I use and that we use with Bank On, not only can they just help the adult, but it can help the whole entire family. So now some of the families are starting to teach their kids now on different ways on how to save money and how to avoid bad credit. And they also are working on their credit through wonderful partnerships we've had, where they've had the opportunity to have their credit reports, all 3 of them, taken. They went over it with them, taught them how to dispute, to bring their credit reports up. I've had people that now they're in homes because of the education that we're going around. So I'm proud to be a member of Louisville Metro Community Services and Bank on Louisville. And the next person that's coming up is going to verify what we say on what we do with Start Fresh, because they actually went through some of the things. So
Thank you, Ms. Boyd, for the work that you do here in Louisville. Derek Mitchell.
Good afternoon. I will accept the baton since it's so close near me. My name is Derek Mitchell. I work with Louisville Metro government within the micro business program. I help those start and expand existing businesses. When I came to Louisville Metro, I was down on myself because I felt that I was viewed as a marginal customer because of some of my practices and mistakes that I had made that caused some different fees and caused an inability for me to have a bank account at that time. I was very frustrated because I had finally landed a great career, but I couldn't open up a bank account anywhere. I got the opportunity to open up a foundational account. And with the foundational account, I began to speak with Mr. Joseph Cecil, who's over Bank on Louisville. and he encouraged me with Start Fresh and the opportunity that was in place. So I began to go to these courses, and it engaged my understanding of behavioral economics, and I understood where I wanted to go to. And from that standpoint, I was able to not only open up a bank account that stems from foundational, but I later opened up another bank account with Fifth Third because it was one of the bank accounts that I had on the list to select. Not only from that standpoint, now I receive in the mail from different bank institutions like Chase for the opportunity to bank. So I ran with that opportunity, and I go meet this Thursday with a representative from Northwestern Mutual to start looking into investing in stocks and shareholders and different things about IRAs. It was just like a flower being in a dark room. And when the opportunity of the sunlight finally hit me, next thing you know, you would see the exposure from the light with the financial lasting effect that one of the panelists was talking about. This is a teachable moment that helped me reinvent myself. And not only with that, I went on to get a level 2 certification in financial empowerment by going through the classes. I went on also to now work on my financial social work certification, and I utilized this component to illustrate to all my clients that come through the micro business program. Because if they can see that I'm a product of the environment that I'm trying to convey to them, and it worked for me, it can work for them as well. And that's why I wanted to stand up and say that through financial empowerment, it created a hunger for financial success.
Thank you, Mr. Mitchell. Thank you for taking the time from your busy day to make sure we have an opportunity to learn from you. It inspires us to keep our nose to the grindstone, to keep doing our work. Thank you. Debbie Belt.
Hello. I promise we did not plan this. We just happened to come in together. But I do work with Joy and Derek, and you can hear how passionate they are in their work. And my role is I'm with the Department of Community Services, and I also am on the Bank on Louisville Executive Committee. So I'm going to take this opportunity, since we were talking about how there are little marketing dollars available in local government, and we've got this captive crowd here. I know that most of you are partners of Bank on Louisville, and that's what makes it work. That's what makes it strong, is we get people from the public and private nonprofit sectors together. But if you are not a partner, and by that I mean just someone that can help spread the word, there's many roles that can be taken. Please do look at bankonlouisville.org. And if you are interested in some of the financial education, the Start Fresh that Joy teaches, call our office. Call 574-5156, which can also be found on bankonlouisville.org. But feel free to reach out. Thank you very much.
Thank you, Ms. Belt. I want to thank everyone that took the time to be here today, provided thoughtful comments. I want to thank the audience, the panelists, and all those watching via live stream at consumerfinance.gov. This concludes the CFPB's field hearing.
Can I interrupt one more time?
Certainly.
Getting a little revved up as I hear people talk here. I want to say that a few minutes ago, what I argued about the marginal customer was kind of a business case for why banks and credit unions should not see the marginal customer as marginal, but see them as an opportunity. And you have reinforced the business case. I think I also just want to say what I'm sure is in many people's minds here, which is that a system in which 10% of Americans are marginalized simply because they lack the means and we're not willing, even though we're obviously able to find products that can serve them and serve them reasonably well, is not the right thing to do. It's un-American that 10% of people should be left behind, and the banking system should be comfortable with that because it doesn't feel economical to dig in and serve that customer base when in fact we now know that we can do so. So I just wanted to say that as well. There's not a universal service requirement in the consumer finance statutes as there is in telecom statutes and other places, but people should feel this sense of obligation if they're in the banking industry, let alone that there's a pretty good business case, as we're seeing, to be made for this. Thanks.
Thank you, Director Cordray. This concludes the CFPB's field hearing in Louisville, Kentucky. Thank you for joining us to talk about this important issue. Have a great afternoon.